Good morning from Chicago, traders. It is 8:01 a.m. Central Time on Wednesday, November 5th, 2014, the day after the midterm elections here in the U.S. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Excuse me. Quick rundown of what's happened overnight. In case you slept through the whole thing, Republicans reclaimed the U.S. Senate seats, enough U.S. Senate seats to earn the largest majority, to regain a majority of the Senate, and now have the largest majority in the House since 1928. I read that and I thought, oh man, a year later we had the biggest crash in stock market history. So yeah, the Republicans are controlling the Senate and the House. So the only thing they do not control is the executive branch, or Obama rules. Overnight, more disappointing PMI data from the Far East. The China October HSBC Services PMI hit a 3-month low, 52.9 versus 53.5. It just keeps dropping. 53.5 prior. Hong Kong October PMI registers its third month of contraction and lowest reading in 37 months following months of long protests. There's the heavy decline in energy prices actually becoming a serious contributing factor to disinflation measures and concerns. The fact that oil is costing less and less is causing a drop in prices, which also affects how we measure inflation. Major European, actually, I wanted to say Iceland unexpectedly cuts its key rate. Major European PMI services come in mixed. Spain, Italy, and France beat, while Germany and the Eurozone as a whole misses. Again, more negative news out of Germany, the key driver for the economy in the Eurozone. The Japanese yen is bearish. The US dollar, Japanese yen pair has hit fresh 7-year highs above 1114.50. Incidentally, Toyota announced record profits, and there was a comparison between the Japanese automakers versus the Koreans, and the change in the yen has been so strong that it's making Japanese auto products much more attractive to consumers. That's likely to further boost Toyota, Honda, and so on. There seems to be more uncertainty regarding the upcoming ECB meeting on Thursday, and this is a key factor today. Tomorrow we have the ECB announcement, and with the changes that have happened with the Bank of Japan, Sweden, and so on, the end of the taper here in the U.S., there's a lot of pressure on the ECB. Reports are circulating. Were circulating on Tuesday that the ECB committee members were planning to challenge President Draghi and critique his leadership style. This could lead Draghi to expand QE as a result. So tomorrow's announcement, which is at 6:45 Central, 7:45 Eastern in the morning, and then the conference at 7:30. Tomorrow's announcement is expected to be very, very important. If you can get up and keep an eye on the market, I certainly would. That's not an endorsement to trade, but it's likely to give us a good hard look at what's next for the Eurozone. The Euro-US dollar hovering just below the $1.25 level right now. The S&P fair value is negative 5.3. The cash is trading 5.3 points above the futures. Looking ahead today, at what's on deck at 8:15 here in 10 minutes, we have Fed's Kosher Lakota speaking. At 8:30, we have Fed's Lacker speaking on financial stability in Washington. At 8:45, which is 15 minutes after the cash open, we have October final market services PMI expecting 57.1. The composite PMI, there's no estimate. At 9 o'clock, just a half hour after the open, Fed's Rosengren at a conference in Lima, Peru. And then Poland announces its rate decision at 9 o'clock as well. 9 o'clock, we have October ISM non-manufacturing composite expecting 58.0 versus 58.6 prior. At 9:30, we have the weekly DOE crude oil inventories. And then for this evening, 5:45 Central, 6:45 Eastern, former Fed Chairman Bernanke speaks at an investor conference in Denver. The Bank of Japan meeting minutes come out at 5:50 Central, 6:50 Eastern. And then we have the Australian October employment and Japanese services PMI coming in later this evening. That's what's on deck for today. Let's look at the technical picture and answer our favorite questions. What have we done? What are we trying to do? How good of a job is it doing? And what is likely to happen based on all those factors? Really dry throat this morning. I apologize. Let's look at yesterday. So yesterday came in in the plan. If you had watched yesterday's Trader Bite pre-market, the plan for yesterday was for the key hypothesis was for a responsive, expected responsive buying to 2010 quarter and 11 even on an extreme push, expected 2012 quarter. But the market actually came in, did a two-way test. It was an open auction out of range. Finally got to 2075, just one tick below our 2011 target early on. And then the expectation per yesterday morning's Trader Bite was for sellers to step in, take it down to 2005.50, which they did early in the morning by a tick. I seem to be missing these levels by a tick. So it went to 205 quarter, but it rotated down, and the expectation yesterday was that we would tackle the 2002 quarter, and if the 2002 quarter doesn't hold, then I was expecting 1994 and a quarter. If you recall, 1994 and a quarter is the gap high, the gap zone high. So as we break into the 2002 and a quarter, which was the key target yesterday, we got a quick bounce off of it as we tested it the first time. We went to 2001 and a quarter before we got a continuation drop, and it pushed through to 1995 and a quarter, missed the gap zone fill at 94 and a quarter, put in a very nice looking low. We found our buyers at 95 and a quarter, could not push to 94 and a quarter to close the gap, but it doesn't have to. And then buyers stepped in pretty strong right here, as you can see here, back to the mid, hovered around the mid quite a bit, and then slowly started to walk itself back up towards the open. And then the afternoon was basically spent in chop with somewhat of a double distribution profile, but the lower distribution is not significant here, and value being having moved lower compared to Monday. So what we had here is what I'd called last Monday, sort of an island day here. We pushed higher to 19 and a quarter, but the expectation was for this to roll over and to start moving towards 94 and a quarter, and it did. The hypothesis number one from yesterday worked out almost perfectly, missed the low target by 4 ticks and the high target by a tick. And then the market overall built a point of control right inside of these 2 days, and that's speaking of balance. So with the response that we got on the gap zone, we see the buyers are still interested at these prices. I'm expecting a retest of I was expecting a retest of 2002 and a quarter. Overnight didn't quite get there. And then what's happened since, this is a beautiful formation here of a top, a nice topping formation for a pullback, like we got, and then under its own devices without the elections having taken place last night and so on. I think the market would have, under these circumstances, for the auction to operate normally, I think the market would have continued a little bit lower and started to tackle these prices that we have down below, mainly 87.50 being the key point of control. Given the way this has traded around itself, this is considered a balance zone, and because it's a balance zone, we're going to extend the micro composite so that we have this profile that represents these 3 days. It tells us where the auction took place in all 3 days. Essentially, for those of you who are not familiar with volume profiling, all we're doing is we are creating a statistical histogram. If you rotate the image you're looking at counterclockwise 90 degrees, you would see that this is a standard statistical histogram, and we're just looking at where most of the volume has occurred in the population, in this population of prices. This represents about 4 million contracts having traded since Friday, or you can also turn your head 90 degrees to the right to see what I mean. But so far, the most valuable price as we speak is right here at 2006. Not liking the way this profile is shaped. It's giving us a neckline at 2015, and then also down here at 2000. Having seen a lot of action, you can see here there's a little divot in the composite composite profile. With the overnight, with the election having taken place, we see here the market's taking a different view on what value should be. And what it's done here is it popped as soon as the announcement came through that Republicans have taken back the Senate. You have a big pop here. Well, not so big, about 5.5 points on that announcement, but the market has been walking up essentially as the results have been coming in yesterday, starting at about 7 o'clock Central, 8 Eastern. So overall, the overnight session had about 16 points in it. 235,000 contracts is about average, or right in there within the average. And the market's basically taking this, the fact that the Republicans have taken over, is taking this as a bullish sign. Republicans tend to be business friendly. Not sure I agree with that view. It seems like both of them are business friendly because both are funded by businesses. But the market's seeing this as a good thing. If you have not noticed, gold took a hit and continues to take a hit. It's trading pretty low. Right now, it's trading at $1,144. It's down $24 on gold, 2% from yesterday. It's a big move down for gold. So that has somewhat of an effect on where the money's moving today. You can see the dollar here, the U.S. dollar index, getting bid the same way the equities have, or the equity indices have, with the election. So what are we expecting today? I expect buyers to be dominant today. I think that they have what they want. There's plenty of support below. The markets are likely to push new highs today and give us that 2175 measured move target for today, and probably push through quite a bit. I don't have targets above for quite a while because of the structure that we had here from 2012 75 to 1813, 200 points down. It creates, it gives me a poor foundation for creating measured moves to the upside right now, especially since we did not have any counter rotation from that low. We've had basically, I think, except for one day right here, the 27th of October, we've had higher lows, or what we call one time framing, all the way up until yesterday. There was no counter rotation to test these levels for validity that then I can take a measured move off of and project upwards. So I have nothing other than the 2021 75 up till 2077.50. So I need to work on obtaining some measured moves. But today I expect buyers to be dominant for this to continue higher on the news. So any selling today, I think, is going to be temporary and measured. I don't think that that sellers have staying power in this environment. So the goal today is to find areas to base against for a long into 2175. They don't take it out right away. Now, hypo 2 is for a failed test higher, pushes to 19.25, which was the overnight high, was one tick above the high of the year we put on Monday, just one tick. So we have a failed auction there so far. If we do take out the overnight high, find sellers and start pushing, then the target below is going to be 2011 again, and then 2006.50, and then potentially 2000. That gives us about 20 points of range. Pretty murky day. Don't forget that tomorrow is ECB, the ECB announcement, so the market's likely to do some jockeying ahead of that. The ECB announcement's expected to be a mover. And then on Friday, we have non-farm payrolls and unemployment coming out, so there's quite a bit to factor in to what we consider to be value, or what the traders consider to be value, which is what the market trades for. And the purpose of the market is to find as many buyers and sellers and get them to trade as much as possible. That is the whole point of the market. It's not here to steal your money or take your money away. The traders themselves do a good job of giving their money away. The market doesn't have to make much of an effort for that. I know I'm being sarcastic, but most traders do not give risk the respect it deserves. So with that being said, we have our two hypos. I'm going to basically sit on my hands for the first half hour and see where things go. We have some Fed speakers on deck, and who knows what they'll say. There was something I saw, a news item I retweeted this morning regarding the Fed reducing its coupon payments on the treasuries that it's putting out going forward. And I think there's some 60-something billion dollars on deck to be auctioned off at a lower coupon rate. So so look out for that. There's some the ground is shifting underneath us with the Republicans in control. We're likely to see some changes take place in the markets at highs. So a lot can happen here. Good luck today. Again, reminder, I'm leaving for India on Friday evening, and I'll be gone for 2 weeks. I'll be checking in next week as I visit prop shops with Eurex in Mumbai and New Delhi. I'll be checking in, but these trader bites, the last trader bite for this week will be Friday, and then next week will be pretty sporadic. I'll try to do at least a couple, but can't promise given the time difference of 10.5 hours. Good luck today. Please watch your risk. There isn't a single trade or a single day that deserves a big chunk of your account. So bear that in mind. Squash your ego and just follow your plan. That's the thing that your plan is the thing that was organized before the emotions tapped in, came into the trade, and that's what's likely to keep you out of trouble. So follow your plan, define your risk, and just let the trade do its job. Take care.